Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Looking at the Australian dollar, once again we've noticed that the recent gains were given back rather sharply on Thursday after reaching a peak of 74.15. Prices tumbled back to refresh an intraday low around 73.80, which was seen roughly today. On the economic front, apart from the published Reserve Bank of Australia's monetary policy statement, RBA Governor Phil Lowe testified before the House of Representatives Standing Committee on Economics earlier today. The policymaker did cite that the COVID woes, but also said that the economy is expected to bounce back quickly when restrictions end. Although the technical call remains to the top side from the view of 74.45.60, into tonight could put a bit of a mixture of bullish terms to the US dollar. As most participants wait for the main event for this week, which is the non-farm payrolls report, which should provide fresh clues on the strength of the economic recovery and inform the outlook for the US federal policymakers. Now, at present, the forecast polled by economists is expected that the US economy will have added around 870,000 jobs in July, which was up from June's release at 850, while the jobless rate is foreseen at 5.7%, down from 5.9 in June. So as mentioned, looking at the technical aspect though, we haven't broken down fully. As you can see, the MACD is married up to the bullish or the positive signal for the RSI that I'm not going to rule out until we get to the top side of the range. That is around 74.25 to 74.45.60. Now towards this region, I do anticipate the bear camp is sitting up here and we could see a sharp rejection and look back towards the support level at 73.45. Now do note, either a close beneath there, or if we do take this level out tonight, it will negate the upside and instead put the focus back to 72.85. Overall though, my broader picture is that we see a failed topside challenge above 74 cents and maybe a rejection if it's reached around 74.45.60 and look back towards the downside to 73.45 or down lower to 72.85. Well, since the rejection of 119.15, or more to the point that the bullish sentiment that was recaptured on Wednesday after comments from US Federal Reserve Board Vice Chairman Richard Clarinder, he's viewed as the key designer of the central bank's new policy strategy. Now, he said that the US economy is on track to meet the employment and inflation hurdles that the Federal Reserve has set for rising interest rates, that is, in 2023. Now, from the slight comments and also keeping an eye on some of these numbers, especially to the non-farm payrolls tonight, is that if we see a stronger non-farm payrolls, then yes, I would say that the market will probably start talking more about seeing the Fed tapering back its monetary policy, and then therefore could see a bit of a difference in the pattern of the dollar as it strengthens beyond 92 figure to 93 figure 60, where I still call it. That would mean we would see the euro tumble back towards the bottom side of the range of 117.50, which I'm in favour of. And especially when you look at the RSI, as it holds a negative signal, but the MACD is positive. So there's a bit of a fight here. But keeping an eye on the current candles, we can see that the bears are still navigating lower. Since the bullish outside range day for the dollar yen, we can see that we are still heading towards the top side of this range, which is somewhere around 110.20 or a stretch to 110.70, which is unlikely at this stage, but I wouldn't rule out 110.20 and reassess from there. We don't have a very strong or more to the point positive out pattern from the MACD, but the RSI is supporting this climb, and the bullish outside range day that was confirmed is keeping and navigating the bullish path to at least 110.20 and reassess from there. Well, as widely expected, the Bank of England failed to give any surprises after keeping their key policy rate and bond buying programme stable, or more to the fact, in line with investors' expectations. The UK Central Bank said economic growth was running slightly above expectation. However, one MPC member, Michael Saunders, dissented on the QE vote, though hints about modest tightening provided a modest lift to the British pound, but not enough to tackle the top side of 139.75, which is still keeping a cap on the recent rally. With a slightly weaker RSI, I feel this might continue and therefore could see a turn back towards the bottom side around 138.75 to 138.35, and especially if the dollar does recover into the non-farm payroll numbers into tonight. With a slightly weaker yen, we've seen that the upside strength has continued for sterling yen, as it now looks towards a target of 153.50, which could see potentially a rejection from this area. So for those that are trading from the bear side or looking for a position, I'd say that this is where the market may step in and find supply to increase and see a downturn back to 151, or eventually down to at least down to 151.15 and reassess from there. As you can see from the technical pattern, gold is still relatively heavy. It's reached its objective of 1,800 and still pressuring this level, or at least the bears are weighing on this support level, could see a further slide. Now, if the dollar does strengthen, this would mean we're looking towards the target of 1,786.88, a key level. Because if this level buckles and we see a close under New York tomorrow morning, then that would initiate a further slide to an objective of 1,760. With this week, fifth rejection from that 1,833 to 35 has kept the bears in check. Looking at oil, well, for this week, the market has plummeted around 5.5% and therefore could see the biggest weekly decline since late October, as pressure weighs on the top consumer imposed travel restrictions amid the spread of the Delta variant of the coronavirus. Meanwhile, rising tension in the Middle East has provided a short-term floor, as you can see here, with the bulls stepping back in front of that level of $66.60. Nevertheless, I've left it wide and therefore could see any advances to probably fail towards this top side of 70.20.25, and the base holding in the short term around 66.60. Well, that wraps it for today. Thank you very much for joining me, but do keep an eye out tonight for the non-farm payrolls numbers, and I hope you enjoy a great start to the new weekend.